Hey everyone, Apple, Microsoft, Nvidia, Alphabet, and Meta platforms have all surpassed the coveted $1 trillion market capitalization milestone, and Microsoft even has surpassed the $3 trillion milestone. So I'm going to bring you one stock that I think can join those powerhouses in reaching a $1 trillion market cap by 2030. So let's take a look at what that stock is and why I believe it can reach that level by 2030. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the stock I'll be discussing here is Netflix. Netflix has a $279 billion market cap, and I think by the end of 2030, I think it could join Apple, Microsoft, Nvidia, Alphabet, and Meta in the $1 trillion milestone. So it would need to more than triple its valuation from where it is today to reach these levels. And surprisingly, Microsoft at nearly $3.2 trillion valuation. These are some phenomenal valuations here for some of these mega cap tech stocks. And I think Netflix could join them in a few years' time. So let's take a look at some factors that I think have me excited and bullish about Netflix stock. So in its latest quarter, we got some more information from Netflix that show its signs of significant progress. For one, revenue growth is accelerating. You notice here revenue growth, after bottoming at 2.7% in the second quarter of 2023, increased to 7.8%, to 12.5%, to 14.8%, and management is forecasting 15.9% in the next quarter. Now, some of the factors that have caused this phenomenal growth are, number one, Netflix has cracked down on password sharing, and there were many millions of people that were sharing accounts. According to one Netflix estimate, there was over 100 million people sharing accounts that shouldn't be sharing. And so that's causing some of those accounts that they forbid from sharing to purchase themselves, and that's creating a boost. Number two, they introduced the ad sharing service subscription, and that's allowing some buyers purchase Netflix that were sometimes hesitant because of the price. Now with the ad-supported version, they can afford one at the lower valuation. And then finally, competition in the industry has eased significantly. Nearly every streaming participant over the last 2 years has increased prices substantially, Netflix included. And so what that has the effect of doing is increasing profitability for the industry overall. I love industries that have decreasing competition. That means everybody in the industry benefits, investors, and it's at the expense of consumers, unfortunately, but it's great news for investors. Now, also, Netflix has done a great job boosting its operating profit margin up to 28.1% in the most recent quarter. That was much higher than management was expecting, and a big jump from the 21% it had in the first quarter of 2023. Netflix is the example I use so often when I'm teaching the concept of economies of scale in university, both in my economics courses and in my finance courses that I teach. Netflix is a prime example of that, right? Because think about this. If Netflix is showing a movie, or Netflix has spent money on a movie, right? It's already spent that money. Netflix, it doesn't cost Netflix any more if 10 million people watch the movie or 100 million people watch the movie. So with more people watching the movie, Netflix cost stays relatively flat, and then that just flows all to the bottom line, because going from 10 million subscribers to 100 million subscribers is a lot more revenue, but it's not that much more cost. Sure, Netflix has to pay for payment processing and cloud storage for, the streaming data, but for the most part, the costs stay flat as the revenue explodes. And that's generated this strong profit expansion for Netflix. That's created these wonderful economies of scale for Netflix and its shareholders. So One of those factors, that I discussed, the stoppage of password sharing, has created an acceleration of subscriber growth. You can see for 1, 2, 3, 4 straight quarters, subscriber growth increasing from 4.9 to 8 to 10.8 to 12.8 to 16%. So Netflix is accelerating subscriber growth, and that's great news. A few years ago, Netflix was talking about reaching 500 million subscribers potentially. They haven't discussed that number all that much recently, especially after the slowdown in subscriber growth they had in early 2023. But that's pretty much where Netflix felt it could reach by the end of 2030. They felt they can get to about 500 million subscribers, give or take a few million, right? And they're still just at 269 million. So there's substantial room for growth for Netflix here as they expand geographically, as they add more content to the platform, as they crack down on password sharing, as the ad-supported version gets more traction. It makes itself more attractive to more consumers worldwide. And of course, streaming is so much more convenient than a cable connection, right? You could take your streaming connection everywhere you go, and that gives it a huge advantage versus the cable connection. And not to mention how much cheaper it is to have a streaming bundle versus having the cable connection, which is soaring in terms of the cost to have that, right? So Netflix also generates very strong free cash flow now, 2.1 billion in the most recent quarter. It's generated over $1 billion in cash flow in 5 straight quarters. Just a few years ago, Netflix was still generating, flat to negative free cash flow. It wasn't just until recently where it's now generating billions in free cash flow. And that's also another strong benefit of its economies and scale. It spends a certain amount of money on content every year. And with a broader base of revenue, now that leaves more free cash flow for Netflix. And it can still increase its content budget and still generate strong free cash flow because it has that captive audience now with over 269 million subscribers. And you can see the longer-term revenue chart here, 34.93 billion, whereas in 2015, it was just at 5 billion. And one important topic I haven't discussed yet is Netflix has demonstrated the capability to create its own content that gets people to watch, that gets hundreds of millions of people to watch, right? Earlier in Netflix's streaming days, I was a lot more skeptical of Netflix because it was essentially paying other people for their content. That was the business model. It was paying the likes of Disney and others so that it can stream its content. But lately, Netflix spends billions of dollars creating its own content. And it has several hit shows, including Bridgerton, Stranger Things, House of Cards, and there's many, many more. They demonstrate that they can create compelling content that's some of the most popular content in the world. It's not lacking in terms of the quality of content anymore, whereas 10 years ago, you could make the case that the content Netflix created wasn't all that compelling. Still, the primarily compelling content came from studios it licensed from. That's no longer the case. Netflix is up there among the best in class in terms of content creation, which is a vital skill when you're thinking about growing your revenue and then ultimately growing your market cap up to those levels of the $1 trillion. So finally, the valuation is not expensive. It's trading at a forward price to earnings of 29.4. So there's room for Netflix's stock price or market cap to increase, even along with the increases in earnings per share. I already demonstrated that its earnings per share are climbing, free cash flow is climbing, all of those fundamental metrics are climbing. But another aspect of market cap growth is the multiple, the forward price to earnings multiple that investors would be willing to pay for Netflix stock. And you'll notice since January of 2023, as Netflix has implemented these growth drivers that I talked about at the top of the video, investors are willing to pay a higher price for Netflix stock because the business model is so compelling. The economies of scale, the competitive advantage that you build with these economies of scale, it's a compelling business model. And so all of those reasons, investors have been willing to pay a higher valuation. And in fact, I have Netflix stock rated as one of my top 25 stocks to buy in 2024. I've had it rated here all year long because of those factors I'm discussing here. So I think these factors could, I'm not saying for sure, but it could boost Netflix up to the $1 trillion market cap by 2030. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.